Good morning. My name is Nima and you're watching The Hot Topic. If there's something the flash crash of the GBP showed us a week ago, is that since the Brexit referendum in June, the pound is skating on very thin ice where anything might happen. Here's a quick look at what happened. It started with the UK's vote to leave the European Union on June 23rd. Investors reacted immediately, with markets from Tokyo to New York experiencing one of the worst trading days since the financial crisis of 2008. By the close of the day, $2 trillion had been wiped from the global exchanges, the biggest single-day drop in history. The sterling bore the brunt of it, plunging to a 31-year low, dropping from 1.50 to 1.36, losing more than 11%. Less than 24 hours later, Prime Minister David Cameron resigned, and after a brief power play, Teresa May emerged as the new Prime Minister. In order to weather the storm, Bank of England's Mark Carney went on to halve interest rates to 0.25% for the first time since 2009 and introduced a bond purchasing program. The markets seemed to give their approval, while a low pound gave a boost to summer tourism and retailers seemed to fare relatively well. So, was this just the calm before the storm? On the 2nd of October, Prime Minister May commented she'll be looking to conduct a hard Brexit from the EU and gave the date for triggering Article 50 by March 2017. 5 days later, during the Asia trading session, the pound unexpectedly nosedived against the US dollar and the euro, while cable plummeted a staggering 5.7%. Algo trading, a rogue trader, and fat finger error have all been blamed for the flash crash of the pound. So, what's ahead for the pound? Britain's GDP is expected to grow by just 1.5% this year and only 0.6% in 2017, which is down sharply from the previous forecasts of 1.8% and 2.1%. While the IMF recently downgraded its outlook on overall global growth, citing heightened risks emanating from Brexit. So while the British economy appears to have weathered the immediate impact of the Brexit vote, policymakers are still bracing for the worst, with the Bank of England warning repeatedly that the worst is yet to come. Now, what does this mean for you, the trader? Opportunities lie ahead with expected volatility, and as always, with greater volatility comes greater risks. If you haven't tried our deal cancellation feature yet, then now might be the perfect time to discover how you can cancel a losing trade within 60 minutes of opening. You'll find the deal cancellation on the trading ticket of your EasyMarkets platform. That's it for this week. My name is Nima, and you've been watching The Hot Topic.